In this video, we're taking a look at gold, crude oil, and Nasdaq to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like professional, check out our complete Forex learning course on Udemy. I have the link attached in the description below as well. So we're starting with the gold chart on the 4 hours time frame. Last week, we talked about the possibility of a small consolidation over here. So if you go down to the 1 hour time frame, that's clearly more visible. And we followed through with a good breakout to the upside. And if you took this trade opportunity with a low risk, because the consolidation was not really huge enough for you to pick out a great trade entry. But if you enter on the breakout of these levels, this will give you a potential take profit target of around 1,300 pips or 1,400 pips, as the case may be, right? So kudos to everyone who did. Stop loss with potentially around 200 pips, as the case may be. So decent trade opportunity here, and right now gold seems to be gearing up for another bullish move to the upside. So bullish case scenario right now will be waiting for some sort of good consolidation, right, followed by another bullish breakout. So this would signal a bullish continuation pattern. So a continuation of this massive bullish move, bullish move to the upside. So if we get a consolidation followed by a good breakout, then you want to look around, taking long around the breakout with your stop loss placed underneath the consolidation at least to the breakout while you trail your positions as we go higher. Because clearly we are currently in price discovery. We haven't got to this price before on gold, so you trail your positions as we go higher if the opportunity presents itself. For now, I don't think it's logical to even think about going short, though there may be a few short trade opportunities here and there. But for now, I won't be talking about any short trade positions because it's not just doesn't align with what I can see on the chart right now. So another bullish case scenario would be watching out for this trend line. I'm going to go down to the 2 hours time frame, the 1 hour time frame. Let's go to the 1 hour time frame, right? I'm going to get rid of these lines so that marks our area of resistance. So if you take out this trend line like this, right, and you pull up the 200 EMA and 200 SMA, so simple moving average and exponential moving average, we have a good streamlined area of support, right? So right now moving average will be acting as a very good area of support, tracking the price closely. So another case study to go long would be waiting to see how price reacts to this level. So if we do get a price dump, price decline into these moving averages, so let's say by the time price gets here, we do get a consolidation and a move to the upside, the moving averages should have crept up all the way to these price levels, right, acting as a good area of support. So if gold drops into these moving averages on a 1 hour time frame and gets a good bounce, that should give you an opportunity to go long. So you can go long after the bounce, your stop loss placed underneath the bounce of the moving averages, and your first take profit target could go as high as these current highs, while the traders of your positions go higher. This is the best, in my opinion. This is going to be the best trade opportunity to go long on gold right now. So the only downside to this is if we do get a bounce on the moving average, this could turn out to be a small consolidation followed by a good breakout to the downside. But at least this setup would give you clearly different levels to place your entries, your stop loss, just in case we go to the opposite direction of the of the current trend, right? But for now, I do think the moving averages on the 1 hour time frame is going to hold at least for the first test. Then maybe the second time we get to these moving averages, it may not hold. We'll have to go to higher time frames for more clearly defined trend price averages. So for now, these are my two base case studies for gold. I know for those traders who want to go bearish, you may want to do something like this, right? You may want to do something like this, then go short on the breakout, aiming for the moving averages. It's just too risky in my opinion, and I wouldn't recommend that. So since we already know we're in a bullish trend, we already know price broke out from this symmetrical triangle, it's best to just look for opportunities to go long. And those opportunities would come if we see the price of gold visiting these moving averages and using it as a support. So if it uses it as a support, then that will give you a nice clearly defined levels to place your entry and place your stop loss while you aim for the highs as we go higher. That's it briefly for my good setup this week. If you love the content, you love the analysis, please leave your thoughts in the comment section down below. If you disagree with me, please also leave your thoughts in the comment section down below. I use these moving averages because they're easier to track trends on multiple time frames, right? So if you take a look at the 2 hours time, for example, you will notice that the moving average is still far away from current price. So that's why I'm using the 1 hour time frame as the first case study for a bounce, right? Because I don't think we're just going to clear through the moving averages on the 1 hour time frame immediately we touch it. So we're going to get a good bounce first. Then the next time we visit the moving average, maybe at that time we get to the higher time frame to see how we can track price on those time frames. So for now, that's it briefly for gold. Moving on, we're talking about crude oil. So crude oil right now, the ship has sailed. Okay, so we talked about the possibility of price taking out this trend line after retesting this area of value. So we got a retest, price got rejected, gave us multiple tests of this trend line, and we had another sweep of these highs followed by a massive price decline to the downside. So if you followed our analysis last week, you would have taken advantage of this opportunity. Your entry would have been placed here, stop loss placed around these highs, and take profit target right now is around these lows, right? So this is my current setup on crude oil. I'm already in on this trade. So right now, 4 hours time frame, this is not a very good opportunity. This is not a good time to go short if you're not already in on crude oil. But I intend to hold my positions to get to these lows, but I've already scaled out of my positions a little, took some profits, holding the rest of my my positions till we get to these lows where I'm going to look for another opportunity to go short, right? So if you're currently not on crude oil, the only way to go short right now will be going to the 1 hour time frame. So I'm going to get rid of this first. This is an alert I just set just in case. So going out to the 1 hour time frame, for example, right? So the best way to go short on crude oil right now, if you aren't in, would be waiting for some sort of consolidation, right? Followed by a bearish breakout. If this continues, this gives us a signal of a bearish continuation pattern, right? So bearish continuation meaning the bearish move from here, bearish decline is going to continue over here. If this happens, then you can go short after the consolidation. Stop loss can now be placed around these highs, and your take profit target can be placed around these lows, right? But jumping into a trade right now makes no sense. So I wouldn't recommend jumping into a trade right now, not at least until you get a clearly defined continuation pattern. It could be a symmetric triangle, it could be a falling wedge, it could be a whatever chart pattern. As far as after the consolidation or after the creation or the formation of the chart pattern, we get a bearish breakout, and that will be your confirmation to go short in continuation of the already existing bearish decline, right? So right now, all you have to do is stay patient. If you're not on this chart, if you're already on this trade, let's say you entered here or you entered here, it is nice to adjust your stop loss to entry to safeguard your trade, just in case we get massive spikes to the upside, you don't lose any money, right? So that's it briefly for crude oil. I don't see any reason why you want to go long right now, because this is a clearly bearish trade opportunity. It's a clear bearish setup, so there's no point going long on this chart or this trade right now. Okay, so you can maybe consider going long when we get into this area of value based off of how price reacts with this area of value. Then you can take short-term bounce before we look for another opportunity to go short again, right? So that's briefly for crude oil. Lastly, we're talking about Nasdaq. So Nasdaq, a very interesting one. This is a 4 hours time frame, and I have a position layered around this area of support. So I got in over here when we got this bounce. Right now, we seem to have moved about 600 pips up. I do think we're going to keep going higher, but this week, something to pay attention to this week is the release of the inflation data, right? So we have CPI results coming in, core CPI and CPI. So pay attention to those, because those are going to impact the market a great deal, and they're going to determine if we do get rate cuts next week or over the next few weeks, right? So for US 100, I would suggest paying close attention to the fundamental data before looking for opportunities to go long. I don't think we're going to take out this trend line. One of the reasons is because if you go to the 6 hours time frame, for example, so on the 6 hours time frame, if you pull up the moving average again, so 200 EMA, 200 SMA, you can see that we are trading above this moving average nicely, right? I'm going to get rid of this. So you can see a clear, trend, with price action above the 200 EMA and 200 SMA on the 6 hours time frame. And I entered this trade immediately. We tagged the 200 EMA. So immediately we got into this range between the 200 EMA and 200 SMA. I went long, and I don't think we are going to see something like this. I don't think we're going to come all the way down, consolidate and then break through. It's possible, but I don't think it's going to happen, right? Because this 200 EMA and SMA on the 6 hours time frame is a very solid zone, and I don't think Nasdaq is going to lose its trend right now. Okay, so that's why I'm going to hold my positions, and the best way to capitalize on this, because we've barely even had a lift off, right? So I don't think we're going to go as high as $2,600, $26,000 for the Nasdaq, right? So if you want to get in on this trade, the best thing to do, go to the lower time frame, so 2 hours time frame, for example. And I would recommend, so I'm going to take off my moving average for now. So what I would recommend would be watching out for a good consolidation. So we may get a pullback following the data, depending on what the CPI data shows, and a small consolidation. If this happens, then look for opportunities to go long after a breakout. So if we do get something like this, a consolidation, I have no idea how long the consolidation is going to form or whichever pattern is going to form, but provided we get a bullish breakout after that consolidation, then that could be your confirmation to go long. So when you go long, stop loss can be placed underneath that consolidation, and you can ride this trend all the way to $25,000. And I think we're going to get there eventually. I have no idea how long it's going to take. And something to watch out for would be going back to the 6 hours time frame. I'm watching out for these moving averages, right? Because I don't think price is going to close below the 200 and 200 EMA and SMA price range, as taking this into consideration as our support level. So watch out for this. Just give me a minute. I'm going to restructure this right now. So let's say, for example, over the coming days or weeks, we may get the EMA creeping up slowly like this, for example, like this, and we may get price coming to retest these levels. So if price retests these levels like this, then this could give you another opportunity to go long. Yes, this is a perfect way to explain my thought process, right? So if this happens, then you can go long after we bounce off of the EMA. We may not, get a bounce off again because we just had one bounce, and this is a higher time frame, right? But if we do get close to those EMAs again, that could be something to pay attention to, and a consolidation like this to watch out for before going long, with your stop loss placed underneath the consolidation that leads to the breakout, while you trail your positions as we go higher, as high as $25,000 or $26,000, as the case may be. I know this a little hazy. If it's not clear enough, leave questions in the comment section down below, and I'll do where to elaborate, as I wouldn't want to make this video too long. That's it briefly for this week's analysis. We just discussed gold, crude oil, Nasdaq. If you agree with me, leave your thoughts in the comment section down below. If you disagree with me, also leave your thoughts in the comment section down below. That's it from me, guys, this week. See you next week.